Historically, when Bitcoin range trades like it did last summer before the election, when it breaks out of that range, there tend to be a lot of shorts that have built up and it just tends to go. So I'm expecting a lot bigger move than what's already happened in July. I think people are going to be surprised.
There are moments in markets that don't seem important at first, but in hindsight, they're massive inflection points. And I think we just had one of those in crypto. It wasn't a price spike, it wasn't a Fed meeting, it was a series of seemingly unrelated events. Options expiration, a Circle IPO announcement, and a growing hum of institutional interest. But together, they triggered something bigger than people realize. One thing I've consistently emphasized, and I'm going to keep pounding this point, is what happens after options expiration in crypto, especially on a quarterly basis. Every quarter end, we see a surge in open interest, and a lot of that comes from producers, Bitcoin miners, hedging their future production by selling into the futures curve. It's a way to lock in cash flow. It's smart business. But what it does is flood the market with synthetic supply at key moments. And as that builds, it compresses volatility.
Now here's where it gets more interesting. Over the past few quarters, it's not just the miners anymore. We're seeing more sophisticated players, funds, prop shops, even structured product desks that are joining that trade. They're either hedging long exposure or trying to profit from the decay of implied vol. The result? Leading into expiry, volatility got absolutely crushed. We saw Bitcoin implied vols dip under 40. That's extremely low for crypto and usually a signal that a break in the regime is near. And right on cue, as soon as expiration passed, the selling pressure started to ease. The synthetic supply dried up, and all those shorts that were stacked around the 110-120 vol range, especially near the previous all-time highs, started to feel the heat. But while the flows were shifting, something much bigger was brewing behind the scenes. Something that I think will be looked back on as a catalyst. Circle. Now let me be very clear. This wasn't just another IPO filing. This was a wake-up call for the traditional finance world, and I'm with Tom Lee on this. This might be crypto's ChatGPT moment, the event that forces the mainstream to pay attention, because here's what happened. Circle comes out, announces its IPO, and suddenly stablecoins are in the spotlight, and not in a speculative degen kind of way, but in a wait, these guys are the plumbing of the new financial system kind of way. What that did, and I've seen this firsthand, is it forced the traditional finance community to start doing their homework. People I've known for 10, 15, 20 years in the hedge fund world suddenly started asking real questions. What's the real value behind USDC? Who owns the rails? How do stablecoins generate yield? Wait, this all runs on Ethereum? And for a lot of them, it was the first time they genuinely dug in. Before, they were just observing from the sidelines. Now, they're getting involved. This is the kind of shift that doesn't reverse overnight.
Well, I think there's two things that have gone on. One thing we talked about, which I'm going to keep emphasizing to people, once options expiration passed, I think a lot of the supply in Bitcoin started to wear off. I think people are going to have to just start recognizing that at the end of every quarter, there is a lot of open interest from people that are selling future production. I think the Bitcoin miners, from what I've seen, have done it. And I think there's a lot of people that just have joined on the party. And so vol was compressed. You got Bitcoin implied vols below 40. So I think once we came out of expiration, there was less sell pressure. There were a lot of shorts that had built up in the 110 to 120 area around the all-time highs or the prior all-time highs. So I think that started. But there's something big that's happened. And I think you and I, because we didn't do one last week, the momentum is growing from the traditional finance community, and I can feel it. I think Circle was a bigger event and may have been truly, as Tom Lee said this week, the ChatGPT moment for the crypto world, and specifically this situation that Circle made people do research. I think one of the things that I have noticed when I talk to people that I've known for a long time in the hedge fund industry.
Transaction fees drive value to ETH holders. Network effects get amplified as more financial infrastructure gets built on it. This is the digital oil thesis playing out in real time. And when we talk about network effects, we're not talking about theoretical growth. We're talking real usage, real cash flow, and real value capture. From tokenized treasuries to on-chain FX swaps to real-world assets being issued on-chain. The rails are being laid. And as these rails get used more, Ethereum benefits directly. A couple weeks ago, I told you the breakout in ETH wouldn't be official until we had 2 consecutive weekly closes above $2,700. That would confirm strength. That would confirm institutional accumulation. That would open the door to a structural repricing. Well, here we are. ETH hit $3,000 today. This isn't a meme pump. This isn't some altcoin hype cycle. This is serious capital recognizing that Ethereum is the foundational settlement layer of the next financial system. And here's what's coming next. People are going to start revisiting the idea of altcoin season. Not in the speculative, mania-fueled way, but in the sense that Ethereum's strength pulls up quality L2s, deep-in protocols, and real infrastructure projects that serve a function in this ecosystem. So, to bring it all together, options expiration removed supply and cleared the air. Shorts got caught leaning the wrong way. Circle's IPO created an institutional wake-up call. Stablecoins pointed the spotlight at Ethereum. Ethereum broke out. And now, the entire crypto stack is getting revalued. This isn't just a narrative shift. It's a repricing of what people thought crypto was and what it's becoming. So, if you've been waiting on the sidelines, just know the game has changed, and it's only getting started.
They haven't put in the time, and you and I have talked about this. Like, if you don't put in the time to understand this, and I was on a call this week with Chris Camillo, and he was saying the same thing about humanoids. It's basically, if you don't put the time in, I don't think you can fully understand what's going on with crypto. And so Circle put a spotlight that, hey, we got to be participating in these IPOs. There's been a bunch of successful SPACs. There's been a whole bunch of things that have gone on. I think we need to do some research. And I think the research has helped one other thing that's gone on. When Tom Lee, while we were gone, basically started the Ethereum corporate treasury balance sheet strategy. And he explained why this fits into the network effects that I always thought were going to happen from stablecoins. So I think if you take stablecoins, Circle happens, people need to do more research. Then they start realizing, oh, we've got this whole digital oil thing underneath it, and the platforms are going to benefit from the volumes and the transactions, and the network effects lead to Ethereum. And I said to you a couple weeks ago that the technical breakout would be if Ethereum closed 2 weeks above 2,700. Well, now we hit 3,000 today. So I think the altcoin season is starting to enter into people's minds again. So I think it was just a triggering of events that Circle helped a lot as an expiration.
PMI bottom shift into commodities and Bitcoin. 2020 post-COVID crash. PMI bottom, huge reflation rally for crypto and cyclicals. 2012, PMI bottom breakout in gold and the early days of Bitcoin adoption. Every time the same pattern emerged. Tech, growth, got exhausted. Momentum stumbled. Value stepped in. Crypto took off thanks to rising liquidity and global growth. This is exactly how macro meets crypto, and it's happening again. Now don't get me wrong, I'm not against AI. Just the opposite. I truly believe AI is the big theme for the next decade. But that doesn't mean every stock with AI in its pitch should be valued at 30-time revenue. The market seems to be catching on to that. The software stocks are getting overvalued compared to the disruption AI itself is causing. That's the irony. AI is shaking up the very companies that were riding its narrative high. Meanwhile, semiconductors are still ruling. Nvidia? It peaked in June, but it's not finished. It's just in a consolidation phase. Earnings are upcoming, data center demand is real. This area remains a crucial growth driver. But behind the scenes, leadership is changing. We're moving away from hyper-growth stories and shifting towards tangible assets, energy, banks, and increasingly, crypto. Let's wrap it all up. You have PMIs hitting bottom, momentum breaking down, AI trade rotating, software stocks under pressure, energy/materials starting to gain traction, Bitcoin holding steady after options expiration. What's next? Liquidity is about to shift. Risk-on sentiment is coming back, and Bitcoin is likely to take the lead. We've seen this before. When momentum falters and global indicators like PMIs start to shift, investors begin searching for convexity. They're looking for those asymmetric trades.
People highlighting, and they're doing it for bearish reasons, because this started in December of last year. We started seeing momentum weaken. And just so for the people that don't follow the stock market that closely, think of momentum as taking the top 10% of the best performing stocks relative to the bottom 10% as an index. So you're really talking about the winners versus the losers. And sometimes when that's moving dramatically, where the losers just keep losing and the winners keep on winning, you end up having this massive move in momentum. And obviously AI has been the dominant impact to the long side of momentum. And that is where things had been driven. So back in December, we started to see a shaking of momentum. It led to more weakness when the DeepSeek announcement happened in January. And by that point, NVIDIA had traded to 113. It had been up at the highs close to 160. So you really had this fall off and everyone was bailing out of the AI trade. And that led to a lot of hedge fund liquidations. So a lot of people are associating that when you have momentum changes, that's usually a bearish thing, or it was the last time. So it probably means the same thing is going to happen because it seems to be happening at the same time as the tariffs coming back on. I think there's a massive difference right now. I think the AI trade is structural. Semis are doing extremely well. NVIDIA is going higher. NVIDIA had...
Bitcoin is the convexity trade when the market feels unsure about bonds, tech valuations, and overall macro policy. On top of that, implied volatility in Bitcoin and Ethereum is still pretty low historically, below 40. That's unusual at this stage in a macro rotation. That's a sign of mispricing, and it's a great opportunity.